Hey, welcome back to our technical analysis daily stock video series. Today we're going to take a look at Target Corporation. It's November the 4th, 2019. And as we enter the holiday season, this is a good one to take a look at. So when we look at the 1 year chart with daily symbols, you see that this has been it's had a strong move, a strong year. Definitely an up move. This move back here in late August or mid to late August was really due to earnings. They had a positive or strong earnings outlook, and the stock really jumped and has remained at those higher levels since then. I mean, to go from being an $88, $90 stock to being well over $100 is pretty significant. That's a nice move on the year for it to have happened so quickly. So let's take a look at the moving average. And of course, it's no surprise that the moving average has largely been bullish throughout the year. If you look at it right now, though, up in this early November stage, the 20-day moving average is actually higher than the 10-day, and of course the 50-day is lower. So the fact that the short-term, our quick moving average, which is the 10-day, is below the 1 month, the 20-day moving average, means that we are not lined up for a bullish moving average right now. Let's take a look at the 5-year. So now we've gone to looking at weekly bars on this graph. So we've got data from basically late 2014 until the current time period. And you can see that even though this stock did have in 2016 and 2017 a bit of a struggle, it was headed lower. Since then, 2018 has been strong. It had I guess Q4 of 2018 fell, but most stocks did, especially if they had any sort of a connection to the possibility of the China trade war. So that happened in late 2018. So the Target stock, of course, fell then, and really since December, late December of 2019, this stock has been on a tear up. It's been moving higher and higher, and then of course we see that earnings pop. So it's no shocker once again that the moving average, even currently for the 5-year, is still significantly high. Because when you look at our short-term moving average on this chart is actually 10 weeks, and that 10 weeks would almost include or account for that large pop at the end of August. So let's take a look at a longer time frame. And the last couple of videos I've done, I haven't really used Fibonacci analysis, and that's because when you see these stocks that are having 100% retracements each time, the Fibonacci analysis really doesn't do a whole lot of good. You can use maybe an Elliott wave and count the waves if that's your thing. I've never really been a big fan of Elliott waves, so I like to use obviously moving averages, Fibonacci, and the MACD, and then a couple others that would take too much to explain in this video or in this video series. But that being said, when you don't have a true pullback or a true retracement that even could be technical, it's hard to rely upon a Fibonacci retracement. So this is just stock data back through the 70s. So you can look in the 70s. It wasn't that the stock was inactive. It was active. It's just that relative to where we are today, it doesn't even make many moves. In fact, it wasn't until the mid to late 90s that this stock started to take off and really take off, and that probably also coincided with some companies like Kmart starting to fail. Kmart would have been one of their larger competitors back in the day. So anyway, we'll get back to technical analysis. Here we're looking at the MACD, and when you have crossovers below the zero line like we had back in December of 2018, that tends to be a strong indicator for a bullish move. And if you look here, we did start to move higher. Now the MACD sort of leveled off and stayed high, and it didn't cross again until really late April. and then it crossed above the zero line, which meant that this was overbought and it was time to sell it. And it sold off a little bit, crossed some here, and came on up. What's tricky with the MACD is if you look at this period between late June and really beginning of August, you can see that the MACD actually came on off significantly, even though stock didn't have that much of a movement. So I don't look at these interim movements as much. I really want to see strong crossovers. This, of course, this move here in late September of 2019 is a head fake because we had a strong cross above the zero line, which means that this stock was overbought and it should have been a great time to sell. Had you sold then, though, it only came down just a few dollars before heading higher again. So we'll see what happens next. The momentum seems to be pushing back below the zero line, which to me is an indicator that this stock might have some more room to head higher. So I wanted to do one more thing, and that's just take a look at the trends. I could tell when I looked at this data that it's had a lot of channeling trends. So if you're looking to trade target technically, you might want to keep an eye on any trending movements that it has, because it trends a lot. It trended, you've got September, really August, before then actually, it would have been summer, we'll just say summer of 2015, all the way down through almost summer of beginning of summer of 2017. So a little more than a year, almost 2 years actually, of being in largely a downward trend minus a couple of nice strong moves higher. And so we have the when you look back, one of the things about back trading is that you have the luxury of seeing what actually happened. So this up move that we see in mid 2017 up through September of 2018, and then that down period because of the China trade war, the announcement of it at the end of 2019, and then it started to go higher again and has popped once again due to earnings. So this doesn't add a lot of value to where we're going to trade it now because we're at all-time highs. But that being said, it's important to know that this is a stock that trades in channels. So always be aware of the channel that the stock may currently be in if you ever decide to trade this stock. So overall, the stock's been trading at all-time highs lately. We're moving. The moving averages are showing very bullish signals, but a lot of the reason for that is that really strong earnings report back in August that had the stock pop about $12, $13 in a single day. Now the Fibonacci analysis, of course, isn't relevant because there really haven't been any true pullbacks and partial retracements. We seem to pull back and then create another leg higher. So we'll see if this stock, how long it does that. The MACD, of course, is showing some bearish momentum because it's heading towards that zero line right now. But that might, once it crosses under the zero line, that will get it into the oversold territory. So if it crosses underneath there, that would be another indicator that we're about to have a little bit of a bullish market. So target stock has had a bunch of trending price channels. So if you decide to trade it, definitely be aware of the price channel that the stock is currently in. And I just wouldn't even fight it. If you fight it, you're probably going to find yourself losing some money. And then, of course, the stock is at all-time highs, so it's strong. I'm not big on selling strength, especially for a retailer in Q4, because these companies, Target, will sell a lot of goods. They're going to have a significant increase in revenue between now and January 1st. So the Christmas season is huge for stores like this. So I'm not really looking to sell the stock, even though we're at all-time highs. Yes, we can go lower, but we could also go higher. So I don't like selling strength. If you are a contrarian, I would advise that you do so with an option. with us being at all-time highs, there's a good chance that the put options are fairly undervalued. So there are a number of put strategies that you could try to engage in to take advantage if and when the stock moves lower. So that's it for Target. Hope you guys are enjoying these series. Feel free to like the video, subscribe to the channel, and as always, happy trading.